Gold has been showing positive trend lately, with the price climbed to highest level in 3 months yesterday. Last week, the price also climbed up by 4.1%, the largest of weekly increase since August 16 last year. How is the prospect of gold investment, and how is the prospect of futures investment, and how's the strategy? Before talking more about it, let's take a look at this one. The contract price of gold climbing to its highest level in 3 months yesterday in Asia. The price of gold for fast delivery contract rose by 0.9% to 1,330.03 per troy ounce. This is the highest level since October 31st. Last week, gold price climbed to 4.1%. The increase was the largest weekly increase since the period ended August 16. Gold price jumps occurred due to an increase in demand for gold as a safe haven asset. Apparently, investors speculated that the U.S. economic recovery will slow down. Record along 2014, gold prices have rebounded by 10% in the middle of the rising demand for gold coins and gold bars. Many analysts see the significant rise of gold price is the thing that investors should be aware of. The price is considered too high and easily corrected. Meanwhile, Asian currencies strengthened during the week over the US dollar. Rupiah and South Korea's won led a rebound increase in the exchange rate. The cause? The data showed that US economic situation decreased. US retail sales in January slumped so badly yesterday. Government report on February 13, 2014 even mentioned the number of unemployed increased. What are the tips for gold and foreign exchange investment? We'll talk about this only on Revenues International. Yeah, to discuss more about futures investment, we have Mr. Vicky Amarnani from Monex Investindo Futures. Hello, Mr. Vicky. Thank you very much for coming to Revenues International. Okay, so the rise of the gold price lately kind of pretty much, already had been talked about by the investors. Quite the spotlight, like everybody talking about that. So, talking about the rise of the price that quite significant lately so far in 2014, some say that it's not really natural because it's quite, quite sensitive to be corrected. So what is your opinion about the rise of the gold price lately?
Okay. Well, I mean, if you see this year, gold has risen about $100. So from $1,220 per troy ounce, it's now trading at around about $1,320 per troy ounce, up about 7%. The reason for this rally is because of the recent weak data in US dollars. I mean, there was the non-farm payrolls were weaker, the retail sales were weaker. But it's important to note, the reason why it was weaker is because of the bad weather in the US during the winter, during December. So according to me, this is just temporary. But if you look at the bigger picture, the gold weakness is still intact. And this is just a pullback, maybe up to levels of 1,350 to 1,360, and then we're going to see a movement downwards again.
Okay. Some say that this is the right time to, to collect gold. Is it going to be the physical or, the other form of the gold? So how do you see that? Which one actually to be the right strategy for the,
for investors? Yeah. Well, okay, let me put it simply. The big move, the big drop in gold of about 30% from 1,900 levels now at around 1,300 levels has already taken place. So basically my view on gold for this year is limited downside, limited upside. So I see it range bound between a level of $1,180 up to $1,400, $1,430 max. So with this kind of range, my advice to investors would be this is the best time to trade because we're going to see gold consolidate between these levels. And basically when you trade it, you have the benefit of profiting when prices rise and even when prices go down, because you can buy to open and sell to close, or sell to open and buy to close. You can do both ways. But for people who want to look into physical buying, below the level of $1,250 per troy ounce. There's great demand of interest in physical gold, especially from China and India. One positive recently, which has brought the rally in gold price, is also that the government of India, India is one of the largest consumers of gold after China now, they have decided that because of the improving current account deficit, they want to reduce the tax on gold. So that's also brought an improvement to the gold price. So for people who are looking to buy physical, they need to understand that this investment is for 3 years or longer, for a longer term period, simply because the buying and selling spread is also quite wide, it can be up to 3 to 4%. And you need to keep that in mind, basically. But long term, 5 years down the line, once US faces inflation, rates go higher, with the support of higher inflation, because all this printing in the US cannot just evaporate. The inflation will come, although now it's not a concern because it's only at 1% and the target is 2%. But longer term, 3 to 5 years down the track, we're going to see gold price rally again and set new highs. But that's for the longer term. For this year, it's on range bound.
Okay, range bound. Okay, we're going to talk about this strategy in trading in gold. So short term is going to be the right strategy so far?
I think so, yeah. Basically, with so much uncertainty out there in the market and seeing a consolidating range, although the range is a little wide between 1180 to 1430, we can take advantage of this range and trade along this range.
Okay, yeah. If you're talking about the economic or macroeconomic data from United States, as you already mentioned before we start the talk show segment, it's quite significant in terms of affecting the price of gold.
Of course.
So can you explain more about it?
Yep, I mean the correlation definitely with US data and gold is very high. Obviously, because if the data in US comes out better, the dollar strengthens. When the dollar strengthens, because gold price is quoted in dollar, $1,220, $1,320 per troy ounce. If data is better, US dollar will strengthen, gold will come down. And basically, why, like you mentioned, why is gold prone to retracing back down or coming back down from these levels? Simply because now the US is doing a stimulus cut. They have cut basically their monthly purchases of assets from 85 billion to 65 billion now in February, and they intend to reduce it 10 billion every month. With positive data, stimulus cut, rates to rise maybe in the longer term in 2016. This definitely is bearish for gold. And another point we mentioned is inflation. With inflation, the US only 0.95%, in fact, not even 1%. They have a target of 2%. At this point, no inflation in the US means weaker gold price as well. So basically, for investors, you can have two strategies. You can trade these two ranges, or when you see gold trade at two current levels, such as 1325, 1350, there are selling opportunities. And below 1250 is buying opportunity because there's a lot of good physical buying. For example, if you see in India and China, coin demand has increased by 78%. So there's a lot of physical buying at these levels. But we have to also understand that investment demand from gold has dropped 63%. And out of the 100% requirement for gold, 40% is investment. So if investments dropped to 63%, that's one of the major reasons that's caused the drop from 1900 levels to 1300 levels because of the whole stimulus cut, positive data.
Yeah, talking about the correction moment, talking about the investment in the gold, some investors kind of having a trauma because the correction is quite significant on 2013. So they kind of still doubt.
Reluctant to enter
the market. So what do you think about that?
Okay, basically the big move has already taken place, the move of over 30%. In fact, when it went down to 180, it was almost 38% drop. The big move is already done because 63% of investment demand has already come down. A lot of people have sold their ETF holdings. Yes, but at a pullback, a lot of people are tempted to sell again. But another interesting point we can look is at gold break-even cost. For big companies such as Gold Corp, for them to produce gold, their cost is actually $770 only. But they have to incorporate the administration cost of running the company. With the cost of running the company, their break-even cost is between $1,000 to $1,100 per troy ounce. And with gold now at 1.3, we are not far away from the break-even. So I do not see gold going below 1,100. In fact, I don't even see a newer low at below 1,180 basically, because all this negative news regarding tapering, positive data, unemployment dropped from 10% to 6.6%. All this data is already priced into gold. I mean, a 30% drop is very large.
Okay, yeah. That's why you see the limited downside and, of course, the limited upside of gold.
Yes.
Okay, it's getting interesting, Vicky. We're going to talk about that later on the next segment.
Sure.
Yeah, we'll be right back with more discussion. Stay tuned with Rafinus International. Welcome back. Our discussion is about futures investment, and we still have Mr. Vicky Amarnani from Monex Invest in the Future. So right now we're going to talk about the some tips to be the wise investors, talking about gold investment or the other futures
FX
investment or FX investment. So what are those?
Okay, basically, I mean, for any investment, the tips from my side is first, it's always good to have a trading journal or investment journal. Basically, you should have a trading plan before you enter the market.
Yeah.
I'm going to buy gold at this level. If it goes up, where's my target level? Where's my risk level? What's my risk to reward? I'm a trader as well. Whenever I take any position, if my risk is higher than my reward, I will not take the position.
Okay.
I always want my reward to be 50% more than my risk in terms of trading. That's another one point. Second thing you should know is what moves your product. If you're trading gold, it's important for you to understand that you have to follow the development in the US dollar.
Okay.
Where is the dollar trading? Where's the dollar index? Like for example, the dollar index is now at 80.1, very cheap. So people would be tempted to buy dollars at these levels, which would cause again a negative fall on the gold. Another thing we need to understand is technical analysis.
Okay.
We may say that gold will go up in the future, but when we enter, when we exit, the timing is very important. In order to achieve the optimal entry and exits, we have to look at technical analysis.
Okay.
Simple systems such as pullback, breakouts are convenient methods as well to trade.
Yeah.
And basically, you need to understand that you cannot put all your eggs in one basket. Any investment you do, whether it's gold, stocks, property, you have your core business, you have deposits, diversify.
Yeah.
Diversify. Even in terms of currency, don't keep all your money in rupiah, don't keep all your money in US dollars. So diversification is the key, and I wouldn't allocate more than 10% of my net wealth into any asset.
Okay, yeah. Along 2014, your analysis, if you're talking about the movement of the gold price, if we see from the technical point of view, how interesting is that? Well,
basically like how we discussed now, we had 1325 level, which is on the higher side. I think we would see maybe a rally up to 1350 and 1360 dollars per troy ounce, and then a correction. So with this limited upside, limited downside, we can use simple tools such as support, resistance, trend line, breakouts, pullbacks, strategies that we are comfortable with. Basically, we need to understand. We have to determine, every trader or investor needs to determine what is their strategy. If you are a more long-term trader and you're an investor, then your approach to profit targets, stop loss levels would be different. But if you're a day trader, then that would require less capital and your targets are much smaller as well. So it is important basically that everybody determines their strategy before they start investing. Don't invest without knowing where your targets are, what your strategy is basically.
Yeah, okay. So when you say you see the limited downside and of course the limited upside of the gold price, how far that actually could be considered as the guarantee? Okay, the risk is not really significant if there is a risk.
Yeah, I mean, it is always important to place your stop loss, and you always, if things go wrong, if your investment goes wrong, you need to know where to basically take the loss. But basically, like I mentioned, because the break-even cost for big gold companies such as Gold Corp, small gold companies have much higher break-even costs. But big companies such as Gold Corp, their cost is $1,100, and then with what is going on in US, so even there, good physical buying near 1,200 levels. And cost is a 1,100 for big gold companies. And then near 1,325, 1,350, all these people, traders, institutions, hedge funds, are willing to short gold because it's clearly on a technical downtrend. And with what's happening in the US, with positive US data, rates expected to rise in the future, the stimulus cut, this is all definitely bearish for gold.
Okay, characteristic of investors also usually match with the investment instruments. So if we're talking about
conservative investors, we have aggressive.
So talking about gold investment, which characteristic of the investors that quite match with a gold investment actually? Okay,
basically I wouldn't put that it's for more conservative people, for more aggressive people. It all depends what you want to do.
Okay.
For example, if you have a long-term approach that now gold has fallen and that I want to buy at levels of 1,300 and I want to hold it for 3 years or longer, go ahead and buy physical gold.
Yes.
Because you have to understand the buying and selling spread is very high, so it has to be long-term. Maybe those are more for conservative traders.
Okay.
For traders basically who want to basically go into the online market and trade spot, you need to understand that when you trade online, you do not own the asset, because the purpose of trading online is basically to to benefit from buying and selling price.
Okay.
You just want to buy, let the price go up,
Okay.
get the difference and benefit. You don't need to own the asset. So for those kind of traders, you need to have a certain scale, a certain knowledge. But more experienced traders can do day trading. People who don't have the time and are not as experienced maybe can do more medium-term trading where they hold positions for 1 to 2 weeks.
Okay.
But in terms of trading, a lot of people get the understanding that you need to have very complex indicators. No, with simple indicators such as support, resistance, trend lines, breakout, using RSI, they are in fact, my experience is they are the best and the clearest indicators.
Okay. Analysis from the analysts, how far that also could be one of the thing that, also being considered as the, one of the consideration before you do your investment strategy in gold.
What do we consider?
Yeah, the analysis from the analyst, how far that also being considered by the investors to
it all depends, right? I mean, see now if you're doing technical trading, day trading, you cannot focus on all the fundamentals because analysts sometimes they have a view of the next 6 months, 1 year, and you're only trading for 2 to 3 days.
Okay.
So you can look at your technical analysis, look at the long-term trend, and that's enough basically. But if you're, for example, a physical gold buyer, you read fundamentals that there's good physical buying near the 1-200 levels, 1-50 levels, and those are, I think, good levels to be buying gold as well.
Okay, yeah. So the indicators can be used measuring of the gold price fluctuation. We also talk about the macro data from United States, and of course we also already mentioned about the inflation in United States. And what are the others?
Yeah, I think basically the 3 key factors for gold is basically macro data from the US, data from China, because recently there's been positive data from China.
Okay.
China is a commodities market. When there's positive data from China, that supports the gold market as well.
Yeah.
And basically the third thing is how quickly will the US taper and start rising rates. The quicker they taper and rise rates, that's going to be negative for gold because gold doesn't earn any interest. But if US starts increasing the interest rate, then that's bearish for gold as well. Yeah.
Okay.
And maybe another thing we also need to look is gold demand. If basically people start looking at gold as safe haven again, recently it's lost its shine as safe haven because of the recent volatility.
Yeah.
But if inflation starts rising again, people get panicked, there's Middle East tensions, and gold is seen as a safe haven, or inflation starts rising, gold would be a very lucrative investment. But for this year, I'm just neutral on gold. Therefore, I think you can take advantage of this consolidating range.
Okay. Yeah. So we're trying to compare investment in gold and investing in foreign exchange. So the movement the movement of the foreign exchange so far, the volatility. How do you see that?
Okay, it depends on currency to currency, and I have certain favorite currencies. One of my favorite currencies is the dollar yen. Basically, what the US did from the crisis in 2008, 2009 was they started quantitative easing. They started printing money to support the economy, and this is what Japan has just started to do now. In fact, today is the Bank of Japan meeting where where there's expectations unchanged for the monetary policy, but with Japan continue to printing money, that's going to weaken the yen, more money supply, and on top the dollar economy is improving, so the dollar is going to improve as well. So one of my favorite trades, in fact, for this year is dollar yen, which is trading now currently at 102. I think at these levels it's very attractive. If you can get a chance to pick it below 100, like 99, 50 levels, that's exciting. But maybe keep certain averaging points, the dollar yen. But my target for this year with the dollar yen is 110, and over the next 2 to 3 years, I see dollar yen going to 140.
Okay, yeah. Before we executing the strategy of investment in foreign exchange, the strengthening of rupiah, the movement was the strongest compared to the another Asian countries' currency. So
it was one of the weakest last year.
Okay, Anyway, so how far that actually could be, one of the consideration before you do you take an action in the foreign exchange investment.
Well, it depends. I mean, if I'm trading other currencies, the dollar, yen, sterling, the euro, I would not be worried. But as we are talking about the rupiah, it's quite interesting to see that the rupiah from 12,200 levels appreciated to 11,650 yesterday, and now it's gone back quickly up to around 11,785, 11,800. I mean, the reason for the strength in the rupiah was because their current account deficit has improved to only 1.98% of GDP. Their foreign exchange reserves have gone above 100 billion. Recent positive data again. Sentiment for emerging markets improved as well. So money is coming back into the stock markets, where the stock market is doing pretty well, trading almost at 4,550 levels, the index, and it's up about 0.3% today. So all this is positive. But there was an article basically by the central bank that they're saying that the rupiah is appreciating too fast. Because what happens is that the rupiah appreciates too fast, it'll affect the imports. Then again, the deficit would increase. So I think even the level we saw of 111.6 was very strong, but I do not see the rupiah going below 11.5. And with the elections, legislative elections in April, with the presidential elections later in July, we still have potential for rupiah to weaken further. And any strength you see in a rupiah, I think, is an opportunity to buy dollar. Another tip for this year: look, the dollar economy is on track, on recovery. Stimulus cut is going to reduce. It's currently being affected by the weather, but once the weather conditions clear up, there should be better US data. So this is an opportunity to buy dollars. So my tip also for this year is buy US dollars.
Yeah, we have one last segment. We're going to have it later on after the break.
Sure.
Vicky. More discussion is coming up. Stay tuned with Rapidus International. So historically, about investment. Yeah, welcome back. I'm still with Mr. Vicky Amarnani from Monex Invest into Futures, and right now we're still talking about the gold investment and foreign exchange investment. So historically, if we're talking about forex investment during political year, and of course we're also going to talk about the gold investment during political year, do you see any effect, through the investment instruments?
Well, I mean, if you look, for example, for gold investment, in fact, because the recent rupiah depreciation, gold prices in terms of rupiah has been pretty stable, 510,000 per gram. So certain investors who think that they want to buy gold as a hedge towards, the certain elections that are coming up is not a bad idea as well. In terms of foreign exchange investment, if you're buying physical currency, I would suggest you to buy currencies that have trade surpluses, such as Korea, Taiwan, Singapore, not the emerging market currencies such as Indian rupees, Brazilian reals, Indonesian rupiah for the time being. But if you're, for example, in terms of trading, spot trading, day trading, those are you're holding position for maybe hours up to just few days. So I do not see that having an impact. But another interesting point I'd like to mention is that basically a lot of traders, investors have become much more active now because of the uncertainty in the market. Trends can be up for 3 weeks and back down again. That's why before 2008 crisis, a lot of hedge funds would buy an asset and just keep it in the portfolio for the whole year. But now people are more actively managing it because there is good news, risk on, risk appetite is on. If markets are rallying, you can look to exit and re-enter the markets and get more opportunities. So with the volatility that's in the market, it provides you a lot of opportunities to trade the market and come in and out of the market.
Okay, you already mentioned about few factors that strongly affected the movement of the gold price. You mentioned about the data from United States and of course the data from China. If you're talking about the foreign exchange, which data that investors should concern at?
For gold?
Yeah.
For gold
for foreign exchange.
For foreign exchange, it depends which currency you trade, but definitely, again, you would have to follow the major currency, dollar. An interesting index to look at would be the dollar index. The dollar index range has been from about 79 to 84.5. The dollar index is an average weighted index against the major currencies such as the euro, the yen, the Swiss franc. It's against 6 major currencies. So that gives you a good idea of how much strength or weakness there is in the dollar. So with a range of 79 to 84.5, we are now at 80.1. So you can see that there's a lot of dollar weakness because of the recent weakness. So from that angle, if I would look to take foreign exchange positions, I would go long dollar.
Okay, yeah, that is the term of the investment in foreign exchange. So talking about, except dollars, although dollar is your favorite currency, if you're talking about the other, other currency, which one is, you want to recommend? And of course, the strategy is, that is quite wise enough.
Okay, there's been a lot of popularity for the Chinese yuan. On Chinese yuan deposits, you can get up to 3.2%, much higher than the dollar deposit. And if you see the Chinese yuan, it has gradually been appreciating from 6.6, 6.5, 6.4. Now it's at 6.3 levels. So Chinese yuan is, because of this election year, it's a good investment which has gradual appreciation, not very volatile. So keeping deposit in Chinese yuan is also not a bad idea. And with the liquidity they're increasing for more products in Chinese yuan, I see more investments coming to Chinese yuan and stronger appreciation, especially with the fact that now people are keeping away from emerging currencies. More investments for Chinese yuan would be likely.
Okay, yeah. Euro, you don't see any good
Euros again, another nice range. I see the euro ranging between 1.31 to 1.38. Now we are like 1.37 levels. So again, for this year, year, basically there's been improvement in US data, Europe data. The Eurozone also appreciated 0.3%, but then it also has its problems with it, a high unemployment rate, large amount of debt. So with the improvement in the economy, but large debt and high unemployment, I see euros to be range bound. And also with dollar appreciation, it'll affect the euro coming down lower as well. So 1.31 to 1.37 is an excellent range. So it's these currencies such as the Europe and the gold, which have a range, they're perfect assets to basically have a trading system on, because there's a nice range to them. But on a trending, I would use a trending system for the dollar yen. It's one of my most exciting trades this year.
Okay, if you try to compare, which one you prefer, the gold investment or the foreign exchange?
Doesn't matter. For me, it's my trading systems. When I have an opportunity in this position, I will take it. So let's say now if the gold is very choppy and there's no interesting positions, and I see a nice attractive breakout on the euro currency, I would buy the euro. So I do not get married to any position. For me, it's basically if there's an opportunity there, it's time to pick it up.
That is the art of diversify the investment, as you mentioned before. So if the investors get some questions that going to ask, do you have any address that they can
well, basically, Monex Investor Futures is a brokerage company which provides spot trading in forex indices and commodity, and CFD share trading as well. So if you would like to know more information regarding investments trading, you can visit our website at www.mifx.com or contact the customer service at 0800 11 66639.
Okay, about Monex Futures, the service that you guys already give to the investors, what are those? And talking about the fluctuation of the few investment instruments, they're kind of having a lot of question about that.
About the market. I mean, because, like we mentioned, because there's so much uncertainty, you have to always be updated with the market. So we have a daily newsletter which updates all the products, what's happening in the market. We have a weekly update. We have a Futures Monthly magazine which updates about the recent events also happening. We have 20 branches all across Indonesia where we continuously have free education for clients so that they can understand whether this product works right for them, what's the right trading strategy, and how to improve their skills. We also have a research department where clients can actually call and talk to our research and see what happened, what action happened in the market last night, what's the forecast like. So basically, it is very essential that investors and traders are guided with the right tools, right information as well.
Okay, if we try to put to the comparison, stocks, property, gold, and of course foreign exchange for this year, 2014, and the political year, which one is more sexier than the other
investment? Again, like I mentioned, it depends on your strategy, but basically I have top picks for certain areas. So for example, for currency, my top pick would be the dollar yen. For stocks, I would still be investing in the US market because I think US markets, even though they're up 28% last year, they can still go up another 20% this year because from a relative valuation perspective, it's still cheap. And with good data, S&P 500 posted earnings for fourth quarter. More than almost 70% of the companies posted better than expected earnings. You can buy stocks with high dividends of 3%. So buy US stocks. For forex, buy dollar yen, trade the gold range. Property, yes, property is always one of my favorites. Always have some money kept into properties. Even though it's an election year, Indonesia is an emerging market. It still has a lot of room to grow. Even compared to neighboring countries, properties are still cheap, even though people think it's kind of peaking off. So just take the best picks from each industry, I would say, and diversify your portfolio.
That is the smartest way. Thank you very much, Vicky, for sharing your tips over the topic today. Thank you. Good luck to you.
Thank you.
Yeah, there was Mr. Vicky Amarnani from Monex Invest in the Futures talking about futures investment, gold investment, and of course foreign exchange. Up next, we have some more news and business information. Stay with Raf News International. Thank you, man.